So today's topic is top-down analysis. I did my last video or something similar, but I want to give you a full top-down analysis of how I analyze the charts. Now, in total analysis, to my understanding, these are the things that we actually have to look for in the chart when doing our total analysis. Now, anytime market takes out external liquidity, market always comes back and take out internal liquidity, vice versa. Market comes in and take out internal liquidity, market must come back and take out external liquidity. Before I continue, I always give a shout out to my coach because it's nice to find someone teach you forex easily. He made forex so sweet for me to understand, and I'm sharing the value like to everyone to understand also. This internal liquidity and this external liquidity. Internal liquidity, we have the fair value gap, the order block liquidity void. External liquidity, we have the old lows and the old highs, equal high and equal low. Then we add our PDRA. These are the things you need to do your total analysis from the higher time frame to the lower time frame. I hope you guys can see it in a better way. I was trying to make it like fit in. So I'll start with my 1 month chart. Okay, it's all combined together. I'll start with my 1 month chart. On my 1 month chart, you can see, right? Many of you will see this as a shift of market structure, which you are right, actually. There's a shift in market structure here, just to put a line to remind you that something is there. Market has shifted structure. Now, there's one thing that many of us have issue with, that is retracements. Well, I always use three candle retracements, the body closing above each body. Now, if you can see here, there is a shift in market structure here, but it depends on the impulse of the move of the candle. It depends on the impulse move of the candle. So I can put a line here just to remind you that there's an order block that comes with a fair value gap. You can see which this market came here to react in. So we have we are what is showing us is that we're in a resistance zone, which is also signaling a sell. We follow the rule. Is there a mitigation block? I can take this as a mitigation block, this small one here. Is there a breaker? No. Is there other block? Other block is around here. Rejection block, you can take this long candle here. You can put a line here as a rejection block, but it take time for market to get there because it's from 1 month. Okay, look how the whole rules. Is there a fair value gap? Now, fair value gap has the four types. I do this to remind myself every time. There's a normal fair value gap, which is this fair value gap. We have implied fair value gap. I will show you one when I see one. Okay, this is an implied fair value gap where the body is up and the whole body is up, but it's only the wick that is inside. Then we have the inversion fair value gap. I will show you an example in the future. And also we have what we call the balance price range. Well, I will also show you in the future. Now, don't forget the rule. If market takes out internal, market always come back for external liquidity. But I use this as my top-down analysis. These lines are just to remind me, but it can make your chart very, 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 very rough. Just be conscious of it. So you just take it back up because market has mitigated this one. Market has mitigated this zone here. But if you can see here, there was a resistance here. There was a resistance here, which market struggled to break through. You can see it, right? Now, if you look inside very, very, very well, there was a kind of break of structure here. We will signal this area. I will signal here as a break of structure for 1 week. I made that too long. For 1 week. But if I look at it very, very well, this is a swing, structural break. This is a mitigation block, right? But on the other way around, if I'm going for a bullish momentum for a week, this will be signaled what as a break of structure because there's a structural move here as a break of structure for the bullish momentum. You can see that, right? Then we'll start with our rule. We have taken out our order block, which is here. What do we have again? Is there any mitigation block? I can put a line here. Just remind me that market might come and react very funny around that place. Is it just a reminder market might act funny? Is there a breakout block? No. We're taking it for the bullish move because it has to come back in to continue. Is there a rejection block? No. Fair value gap. I can see a small fair value gap inside here. I can see a fair value gap inside here. You can label it. You can put your setting. You can put 1 week. Okay, you can put 1 week. Oh my god. You can put 1 week and put 1 week here. Then I come down. Then you use your Fibonacci from the high to the low. from the high to the low. So you can see market is in the premium until there's a shift in market structure on 1 day. Can we now start targeting the other block from 1 week? Then I go down to my 1 day. On my 1 day chart, where is my guide? This is my guide. I call this my guide. Every time I analyze the charts, I always try to write it down. Sorry, I'm taking so much of your time here. Okay, so this is my guide. Now, don't forget, on 1 hour, on 1 week, we are in the premium zone. But for 1 day, we are not in any premium zone. Now, if you look at 1 day, we are still trying to refine it down. There is a break of structure here. And also what? There is a break of structure here. Yep, me, my hand is not straight. Break of structure here. Now, let us follow the rules now. We start with what? We start with the rules. Is there any mitigation block here? No. Is there any breaker block? No. Is there any other block? Yes, we have other block here. Is there rejection block? You can take this week as a rejection block. It's almost like rejection block is almost like swing points. So this is a rejection block. You can take it, you can mark the week. But anytime there is a long week, majority of the time, market always acts 50% of the week. We can just put a line there just to remind you. But this is the other block. We can put a line just to remind you in the future. Is there a fair value gap? You can see a small fair value gap inside here for 1 day. Don't forget, you can label. You can label. You can label it. Then ask again yourself a question again. What next? Is there a liquidity void? No. Is there old lows or old highs? You can go to the past and see what you are seeing there. Now, the past in the area is just to help you to target where markets can act funny. And you can see there's a break of structure here, and what is here? A breaker block. So just put your line there, just a reminder. So in case market gets to those areas and markets start acting funny in the future, you know that okay, there's even a line here. You know that you've targeted that place for markets to bounce back. But just go back there and be checking what is the market showing me in the past as your old lows and old highs. These are old lows, but now we're targeting the old highs as our take profits. I want to be very fast with analysis. Now we're in what? We're in what? The premium zone of 4 hours. But 4 hours is showing us bullish momentum for a lower time frame. I use this my same guide again. Don't forget your guide. Now it must be a 3 candle retracement. This is another block here. My last candle before the impulse move. The swing low. This is the last candle. The swing low, the impulse move. Then what do I have again? Do I have a fair value gap? No, I have a liquidity void. I want you to see it very well. Why is it acting so funny? Okay. I want to see it very well. Now you can see it now. This is the liquidity void, impulse move. You can see it right around here. We're expecting market to come and react here because why? There is a retracement. You can see it's multiple candles that is here. Even though it's 3 candles that are closed, they must close below each other. Put your line here. They must close below each other to signify a retracement. Then I usually go back to 1 hour. Some people do counter trend. Some people do counter trend. They will take the sell. They will take sell. They wait for a change of card to happen on the sell momentum, and they will take the sell down to that area. The markets will keep going and keep going till they get to that zone. But on 4 hours charts, right? Don't forget, you will still refine that area we marked on 1 day. That zone we marked on 1 day. This is how weird I analyze my own. Yeah, it take time. Yeah. Now that area that we marked on 1 day, right? That area that we marked on 1 day, I can put a line here. This is a liquidity void, right? You can put a line here. Can change the color. These are areas, potential areas I believe markets come to come and react in. Very, very funny area. Liquidity void. Liquidity void is usually 50%. This is a fair value gap or liquidity void. But for my end here, this is 1 hour. I'll go to 1 hour charts. On a 1 hour chart, majority of us, well, this is a bearish, this is a premium zone on 1 hour chart. This is your guide. Are you with me? On your 4 hours chart, your Fibonacci should be your friend. Draw it from down to the high to the low. from the high to the low. We're in the premium zone of 4-hour chart. So you taking a buy from here on a 1-hour chart is kind of risky, but some individuals do like to risk it. You can see market shift to market structure, and there's what a breaker block here, and it's still going up. What we're waiting for is a market to change character. Now, why did I put this line here? I put this line here because there are potential zones I believe market is coming to come and react in. And you can see, you go to the past, you keep refine those areas you marked from one day, you keep refining it to find zones that market can come and react in, and I'm waiting for market to come and shift. And see, market shifted here. Market created a mitigation block here. You can see it, right? Market created a mitigation block here on 1-hour zone. Some individuals still refine to 15 minutes. Depends on how you want to trade your zone. Then those areas in the past will help you to know which areas are good for your zone. And you can see now, this is our one. This is the zone that we took in from 4 hours. There was a shift, but I won't take a shift to market structure here. There was a swing high here, a market shifted structure. If you go to a lower time from 15 minutes, you will still find an entry there, but market is still going down again to go and tap the other block. And you can see there was a shift in market structure here. There was a shift here. If you look inside here, there's a swing point inside here. Go to 15 minutes, you will see entry. There's also a shift here, you see entry. If you go 15 minutes, you will see entry, and market is still struggling. Market is still struggling, and you can still go down. This is just 4 hours. This is just 4 hours area. And if market break that 4 hours, if markets break 4 hours, we'll be targeting 1 day zone. If markets break 4 hours, our next target is the zone we marked for 1 day. If markets, you see, market has broken 4 hours, and if you draw a Fibonacci from the high to the low, market going around 50% or around here, you can put your line here as form of liquidity. Market wants to go and take in, and it's going to sell down. It's going to sell down. Do you see? It's going to come down to 1 day. And if 1 day, this is our 1 day zone, doesn't hold the buy and it will keep on selling, our next buy is going to be on 1 week. That's the beauty of total analysis. So you just keep going. Break of structure here. You can see the structural break here. Market have shifted structure. There may be a form of reaction here. You just have back of your mind that you mark all the lows. This is a mitigation block here. So there's a high tendency that market might get to that area and react. You see, it's still playing around that zone because these are from the higher time frame. I hope this can have an impact in your trading and how you analyze the markets. But please follow this guide, it will help you a lot. A shout out to my coach again for being a wonderful coach to me and helping me. And to those that are learning, if you have any question, ask me in the comment section, and I'm always glad to reply every question I see in the comment section. Thank you.